I'm Chris Adams, the food bookkeeper. Today we're on day 4 of why entering sales is so important. We have taken the top 5 criteria needed to enter sales, taken one a day, and just kind of explained it in a video series for you. So today we're talking about the sales component that you find on a POS report. We did mention all of these sales components on Tuesday when we were talking about how to enter the daily sales journal entry. I just thought today, now that you know how to enter and create the daily sales journal entry, today we talk a little bit more about the categories or the food components. So one thing I just wanted to mention is all of our clients use different POS systems. So I just took one, Toast, and downloaded actually one of our clients' sales from yesterday. I clicked on the link that says export into Excel. And so that's the report that I look at in order to enter their daily sales journal entries. And I just thought I would highlight where I find that on this particular Toast Excel spreadsheet. If you have any questions on your POS reports on where to find the information to enter the daily sales, certainly email me a copy of one of the days and I can highlight what information you need to create the daily sales journal entry. So let's get started. So the first one, most important, is the sales or the income, meaning lunch sales, dinner sales. You can break it down as far as however you want to start to record it. A lot of people just do food sales, and then they'll do non-alcoholic beverages. They'll do beer, wine, liquor, however you want to do it. Some do, like this particular client wanted draft beer, bottled beer, so they can track it that way. And so that's kind of, and actually, and this particular client also uses seltzer as one of because he wants to track how much she's actually selling. So you would find that information, at least for the Toast spreadsheet, you would find it under the sales categories, where to enter that for the sales journal entry. So these are entered as credits, the sales income. So for example, if you sold $500 in lunch and you were tracking the lunch sales versus the dinner sales, you would enter in the chart of accounts, you would credit the journal entry. So let me back up. So the lunch sales would be 500 for in the chart of accounts, and you were crediting the journal entry $500. So that's how you do for entering the sales each day and where you find it. Now, the food comps or the beverage comps, I did mention that very briefly on Tuesday, and you do track the comps. So another reason why would be maybe if a customer, patron at the restaurant did not like their meal and you are comping part of their dinner because they were not liking their meal. You track how much you are offering for the food comp in your daily sales. And you find that information under discounts in the sales category for the on the Toast report. But this is a way to definitely track it, because if you see a pattern, you want to be notifying the back of house, the chef or whoever, that there has been, areas with their food that the patrons are not liking, and that you are continually comping their food, which is not a good thing. So the journal entry definitely helps track how much you are actually comping for the, to help satisfy these clients, and hopefully that they come back for another dinner and try it out again. So that is that part. Then the sales tax payable. So we all have to pay tax to the state. And so you are tracking how much you are collected from each sales that you eventually have to send to the state at the due date. So you've collected it, and then you are crediting the account. So to find the tax, first of all, is on the Excel spreadsheet is under the sales summary, at least for Toast. I can help you find where it is, but it should just be labeled as tax. And it's on the top line of the Toast report. So you are receiving the money from the patron, and then you have to send it to the state. So you are paying the state at a later date. So this sales tax money is owed, which is classified as a liability on the balance sheet. So by crediting within the journal entry, the sales tax payable account on the balance sheet will increase. So you will definitely be using it as a credit on the journal entry. If you have any questions on that, I can certainly help you with that further. With each situation may be different. Gift cards. Gift cards are a tricky one because it's going to go on the debit column as well as the credit column for different reasons. So on the credit column, it will be when gift cards are sold, and it will be on the debit column when gift cards are redeemed. So you want to track when cards are being used and when they're being purchased and when they're being redeemed. So if you have a $75 gift card was used by a customer to pay for a dinner, then you will be entered as a debit, and it reduces your gift card liability by that same amount, the $75. It can be a little confusing, but that's how you track the why it's on two different columns, because one is when you purchase the gift card and then one is when you redeem it. Tips payable, and then we're going to be talking a little bit more about tips payable tomorrow on the final day, but obviously tips are a driving force for the hospitality business. Servers are not paid that much, and so they are relying on the tips that the customers are providing. So if you are collecting the tips, it's similar to a gift card. So they act as a liability on the balance sheets, because when you receive the tips, you owe the staff, which is increasing that liability. And then you are likely paying out the tips, depending on the situation for the restaurant, but lots of times you then have to pay out the tips in the next paycheck. So that's why it's a liability, because it's not really your money, but it's owed to your employee. Unlike gift cards, however, tips are always a credit on the sales journal entry. And not to be confusing, but that's how tips are. Now, if tips, some restaurants pay out cash tips every night, while others pay out cash tips differently. So other restaurants keep all the money to be paid later. This nuance is where accounting for tips can be challenging. And I recommend that you speak to someone regarding how you want to set up the tips for your restaurant. Cash on hand. Cash on hand can be found. Oh, and one last thing about the tips is you will find that in the sales summary portion of on the Excel spreadsheet for the POS report. As far as for Toast, that's where it's located. The cash on hand, you'll find it under the payment summary on the Toast POS system, and you'll see under total, and it will say cash. So the cash will be recorded as a debit on the journal entry, and therefore increases the amount of the asset on the balance sheet, which is good. Credit cards receivable. You sell food, the customer pays with a credit card. You'll find that credit card amount on the POS report under payment summary titled credit, again, for the Toast POS system. So usually you receive the money from the credit cards normally 2 days after into your bank account. So you have a way of tracking how much is coming through into your bank account. But remember, it's always 2 days after. If you have any questions with any of these sales components, it can be tricky. And again, if you want to send me an example of your POS report, I can highlight it and explain what where you're going to take the information and put it in the sales journal entry. And once you do it, it'll be no problem, and you will set that up in the template, as I mentioned before in Tuesday's video. Any questions, feel free to email me. and using the contact information in this email. We'll talk to you tomorrow, the final day, about tips. Thank you. Have a great night.